All right, let's jump right in. Something really fascinating is going on in the world of global finance right now, and I mean something big. The world's most powerful financial players, we're talking central banks, are buying up one of the world's oldest assets, gold, and they're doing it fast. So in this explainer, we're going to break down what's happening and, more importantly, why you should care.
And that really is the million-dollar question, isn't it? This isn't just some minor portfolio adjustment. This is a huge strategic shift. It really makes you wonder, what do they know that the rest of us don't? Let's start with the numbers.
Okay, get this, 24 tons. That's the net amount of gold central banks snapped up in just 1 month. To give you an idea of what that looks like, that's over 50,000 pounds of solid gold. I mean, come on, this isn't a casual purchase. This is a massive statement.
So, to really get to the why, we've got to look at the what and the who first. Let's dig into the hard data behind this global gold rush.
So take a look at this. You can see right away what's happening. Sure, you've got Uzbekistan selling a bit, but look at the buyers. They are just completely running the show. Poland went on an absolute shopping spree, adding 29 tons, and China wasn't far behind. This isn't a balanced market at all. It's practically a one-way street.
And listen, this isn't just a fluke, right? It's a clear pattern. For Poland, this was their 11th straight month of buying gold. China's on a 4-month streak. And you see the same story with Turkey, Jordan, Qatar. The list goes on. These guys are all moving in the same direction. It's a trend.
Okay, so we've seen what's happening. Now for the big one. Why? What's the deal? What's motivating these powerful institutions to make such a big move into gold right now?
Okay, so if you ask a central banker, you're going to get the official buttoned-up answers. You know, they're diversifying, managing risk, hedging against inflation. They'll say it's a safeguard against geopolitical chaos. But that last one, non-counterparty store of value, that's a big deal. What it really means is that gold's value doesn't depend on someone else's promise to pay you back. Unlike a bond or even a currency, it stands on its own.
And we're not talking about them just dipping a toe in the water here. Look at these numbers. For Kazakhstan, gold is more than half of their entire reserves. For Turkey, it's almost 40%. This isn't just a side bet. For these nations, gold is becoming a central piece of their whole financial game plan.
But just saying diversification doesn't really capture the sheer scale and urgency of what's happening. There's a much bigger story playing out under the surface, and that story has a name: de-dollarization.
So what is de-dollarization? It's pretty simple, really. It's just countries trying to rely less on the US dollar. See, for decades, the dollar has been king of the hill, the world's main currency. That's given the US a ton of economic and political power. And now, a lot of countries are saying, hey, maybe it's time for a change.
And this isn't just some crazy theory. You can see it right here in the numbers. This has been a slow burn for a long time, but look at how it's speeding up. Back in the 60s, the dollar was nearly everything. Then 71%, 59%, and now it's down to around 45%. The world is clearly and quickly moving away from relying on just one currency.
And by the way, all this data we're looking at, it's not just pulled out of thin air. It's tracked very carefully by groups like the World Gold Council. They're the ones who gather all the official reports, so we have a really clear picture of these huge money movements. So, this whole trend, it's not just about boring financial strategy. It's being driven by something much more fundamental, a real growing skepticism about the US dollar itself.
And this slide really gets to the heart of it. On one side, you have gold. It's been actual money for thousands of years. It holds its value. On the other side, you have fiat currencies, like the dollar. Their value is basically based on a government's promise. And here's the kicker. They can be printed without limit, and they almost always lose value over time because of inflation. One is real and finite. The other is, well, it's a promise that can be broken.
This feeling is summed up pretty bluntly by the financial author Robert Kiyosaki. For him, and for a lot of people who think like him, it's not just about economics. It's a flat-out vote of no confidence in the management of the whole system. And he really doesn't hold back. I mean, calling the US dollar toilet paper? Wow. It's a provocative statement for sure, but it gets his point across. A currency that can be printed endlessly will, in his view, eventually become worthless. It's that deep level of distrust that's pushing not just people, but whole countries to look for an escape hatch.
So, okay, central banks, de-dollarization, currency debates. What on earth does any of this have to do with you? How does all this high finance maneuvering actually connect to your own personal wealth?
Well, the best way to think about it is like insurance. Central banks are using gold to insure their countries against financial chaos. In the exact same way, a lot of people see gold as the ultimate insurance policy for their own savings. It's a way to protect yourself from the very same things: inflation, economic crises, and just watching your money become worth less and less over time.
So if we boil all this down, what are the big takeaways? 3 things. First, there's a huge power shift happening. Nations are fighting for their financial independence from the dollar. Second, everyone's looking for alternatives, which means we're probably heading into a more complex, multi-currency world. And third, and maybe the most important, this is all happening because of a deep, deep crisis of trust in the old way of doing things.
And all of this leaves us with one massive question. For centuries, people have looked for a safe place to put their wealth. Now that governments themselves are scrambling to hedge their bets, running back to an ancient asset like gold, it forces every single one of us to ask, in this new world we're entering, what is the real safe haven for your wealth in the 21st century?